there's something in the air.
Shut the doors! Shut the doors!
Fear starting to descend on global markets.
Stocks taking another tumble today.
Stocks are down about 800 points or so in terms of the Dow.
It's a deteriorating picture, actually.
Commodity prices dropping sharply. Oil down more than 9%, while the Aussie dollar hit a 2-year low. All driven by predictions of the economic downturn that must not be named.
Fear of a name only increases fear of the thing itself.
All right, fine. Recession. That's 2 consecutive quarters of negative GDP growth, and markets have spoken. There's a global one incoming.
Probably a 75%, 80% chance within the next 2 years, and there's certainly a real risk that it will come sooner.
Australia's last recession was triggered by the Black Summer bushfires and the first COVID wave. If we do tip this time, it'll be largely due to the RBA's efforts to tackle inflation, with a series of savage interest rate hikes, which aren't over, by the way.
I think there is a bit more pain on the way. We're probably more than halfway through the rate hikes.
Both household budgets and houses themselves have already been hammered.
We're looking at house prices falling 15 to 20% across Australia as a result of higher interest rates.
For families struggling to keep up with the cost of living, it's hard to imagine the poison being much worse than the remedy. But both the Reserve Bank and the government are adamant. All's fair in the fight against spiralling inflation.
We feel the pain of the Australian people. Nothing would be worse for the Australian economy and for Australian households than to see the price of everything galloping ahead at 10 and 15%, which would be the result unless we put in place this short-term action now.
Well, hopefully finance guru Evan Lucas has put on his positive pants along with that positive shirt. Evan, you were pretty optimistic when we spoke about it last month. Do you still think we can swerve a recession?
We certainly can, Hamish. I think you need to still look at what we've seen data-wise. It is starting to slow, but retail sales still showed us that we are doing relatively well. Not only that, the interesting thing that we've been discussing for the last couple of weeks, as well as things around new home loans, etc., they actually grew. Now, it's not actually the economic data, but the survey data shows that the reason people are doing that is that they believe the housing market cooling is an opportunity. They actually are looking for the buy. So at the moment, there is certainly signs that we can swerve and miss the dreaded R word being recession. The question is, again, around consumption. Household consumption is the big core part of what the RBA is trying to curb and trying to slow us down from our spending. The catch and why recession gets brought up is that if they slow us too much and household spending slows down faster than they expect, that can therefore be a negative add to gross domestic product, GDP, and that's where the recession comes about.
Evan, economists and politicians seem reluctant to even say the R word. Are they worried we could manifest a recession into existence?
That is the $64 question, Mitch. And that reason for that is because what you're alluding to is the core question is around behaviour. Do we actually talk about this so much? Do we actually, as you said, manifest a recession because we're told start saving, buckle up, expect higher interest rate repayments and expect an economy to slow down? Does this actually end up being a recession because we change behaviour by talking about it rather than actually any lever that we're pulling?
The 2020 recession, Evan, was comparatively and mercifully pretty brief. But if people haven't lived through a prolonged downturn like that, what are they like? What is a recession like?
2020, technically, you're right, Georgie, was one. You have to go back to sort of looking at what happened at the recessions in the early 90s. So when Paul Keating said the recession we had to have, it's unfortunately a bit of a self-fulfilling cycle in the fact that your ability to go and spend on things you want to gets impacted. Or, more importantly, business activity slows down. So that cafe on the corner that you wanted to go to, you've stopped going to. They therefore can't do the business they want to do. They slow down so much that they have to close. That therefore leads to things like higher unemployment. Higher unemployment therefore means those people don't have a job to keep spending, and so on and so forth. That's why they are dangerous. That's why they can be scary. Touch wood, that doesn't happen. We can have a slowing of growth. We just don't want it to cause such a slowdown that we end up in recession.
At the same time as all of this is happening, the federal government's still ploughing a lot of stimulus into the economy through all the different spending programs, promises the new government made, promises the old government made that this government wants to keep. If we were all being super reasonable and responsible about this, would that still be happening, or would we actually be taking an axe to some of it?
So, in argument to that question, Hamish, yes, there should be some of it that's probably taken out because it's probably seen as waste. But at the same time, you need to have government spending part of it. I mean, government spending particularly helps the lower socioeconomic part of the country. Childcare is a big one because if you all of a sudden have more people at work, particularly women, which is a really important thing, then you can get yourself out of recession faster because economic growth happens, more women working, more money going into the economy, more spending happening. So those programs are what actually help us keep out.
Evan, thanks for joining us.
Thanks, guys.